I thought the Raiders slogan was just win, baby, but it's just win, baby, for 3 quarters and then lose it at the end. What's going on, everyone? Happy Friday, which is also Forest Friday, and welcome back to Sin City Crypto Live. My name is David. I'll be one of your co-hosts, and today, like every day, we're coming at you from our studio in the heart of Las Vegas, Nevada. Today, we're talking Sam Bankman-Fried, a new FTX revival plan, which he approves of, which I don't know what that means to you, if that means a lot or a little or nothing. But we're going to discuss it also. CZ and Sam get into a Twitter feud. Coinbase is targeting Tether. And of course, we have our man Forrest here to talk some price predictions. Before we get into the content, I have to introduce you to your other co-host, Big Rob.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information and package it up in a fun and sexy way. Also, I'm wearing this Portugal jersey because Portugal's playing tomorrow. That's right. The Portuguese language is very romantic. But in Portugal, I'm sure you're not hearing a lot of romantic words in Brazil because I'm sure there's a lot of cussing. Brazil is now out of the World Cup, the favorites.
Fechado o Mundial por Brasil. Fechado.
Yeah. I know we got a lot of Brazilian people that watch the show. So my heart goes out to you.
And if you were recording the game to watch it later, well, we just spoiled it for you. So we have some news regarding Sam. So, there's this back and forth. Is he going to testify? They don't want to subpoena him. They ask him nicely. Well, he going to testify. So he tweeted this morning at 4 a.m. I still do not have access to much of my data, professional or personal. So there is a limit to what I'll be able to say, and I won't be as helpful as I'd like. But as a committee still thinks it would be useful, I am willing to testify on the 13th. So he was asked for a response if he was going to testify in front of the Senate on the 14th, to which they didn't meet the deadline. His team didn't respond. And then he comes out and tweets that he will be speaking to the House on the 13th with his bootang, Maxine Waters. He goes on to say, I will try to be helpful during the hearing and to shed light on what I can on. And he lists everything he's going to talk about, like he's the one running the testification here. FTX, this is what he's willing to talk about. FTX U.S. solvency and American customers. Pathways that could return value to users internationally. What I think led to the crash, my own failings. I had thought of myself as a model CEO who wouldn't become lazy or disconnected, which made it that much more destructive when I did. I'm sorry. Hopefully people can learn from the difference between who I was and who I could have been. So, Isn't it kind of weird that
he put epochs or chapters onto his own
This is what I'll be talking
his own
about.
testifying. He's like, I understand that I'm there to answer questions. However,
These are the questions I'm going to answer.
This is what I'm going to be answering.
This is just, it's like a soap opera. This is what are your thoughts on that? What are your thoughts on everything he said? Do you think they're going to grill him like they grill
It's going to be no different than the Twitter Spaces interviews he's been doing. He basically mumbles, says money is there. FTX has users' funds. That the platform was taking risk by the leverage, which was understand to be in the system because of margarine and leverage. That's how the exchange worked.
You say margarine?
Yeah, margarine. Yes, margarine. So that's how they got there, man. And is apparently no fraud behind it. It's just extreme leverage. It's what was it it was a few $1 billion was in their liquidity, leverage, futures, all of that. And but yet they blame all the money being gone to that facet of the exchange, which mathematically does not add up or make sense. But he's still going to rely on that. And then when he gets asked a question that he does not feel comfortable answering, he's just going to mumble and then dodge, right?
And then mumble and say, well, I don't remember. Or I don't have the information in front of me.
Mm-hmm. That's
it's
textbook self-defense. If you want textbook amazing self-defense when you were obviously guilty, you dodge questions, avoid answers, and give half-truths.
So Congress isn't the only government body that is looking into Sam. The Federal Election Commission is also looking into Sam Bankman-Fried, that he violated federal law. This is in regards to him admitting that he donated tens of millions to Republicans under the table. FTX CEO Sam admitted to donating tens of millions of dollars to Republicans under the table, which is in violation of federal law. The Citizens for Responsibility and Ethics in Washington filed a complaint with the FEC, citing comments that Sam made in an interview with Tiffany Fong. He said, all my Republican donations were dark. That's what he said. So, hey, I guess if we can't get him on fraud charges, I guess we can get him on illegally done, right?
Yeah. So you have the first situation where he's going to be testifying, right? Okay. Are you in the camp that he might not see jail time?
I think it's very possible. Unfortunately.
So here's
an
interesting situation. He could also serve time for perjury if he were to lie under oath, right? Because he's going to be under oath. And if his former interviews are anything to go off of, what he had on Twitter Spaces with all of this whole little tour of interviews he's been doing on social media, he's said multiple lies on there, right? That at some point you can fact check and be like, bro, you just straight lied. And so if he does the same in Congress under oath, if he were to avoid jail time because of his actions with FTX, it is a possibility that prosecutors will just try to throw the book at him for lying. And so
I would like to literally throw a book at him.
What book would you choose?
The freaking encyclopedia.
Clifford the Big Red Dog?
The encyclopedia. Because it's big and thick and really heavy.
Wow. That's
I was making sure I wasn't taking that conversation. We have a new person in the chat. Said Adonis said, hola, my first time here, and he's hitting the like. Adonis, welcome.
Yeah, we do have a few new people in the chat. So we got Adonis, we got Dave, ICP Millionaire, Toby Chapman, Tiago, and pronunciation of names is
but for some reason we let you do the shout outs, which is
and
weird.
Also Credo Mac.
So before we bring on Forrest, I want to cover so the PPI numbers came out today.
Where's all our viewers at? We got 60 people in here.
Unacceptable.
Can you guys hit the like button? Maybe we can tell YouTube like, yo, what's going on? Can we get some likes up in here?
What's going on? So what the hell did I describe? I have no idea, to be completely honest with you. Also, Pet Brett. Is it Brett Pet or Pet Brett? Pet Brett. Pet Brett.
Yes.
Is a new hodler. Thank you so much. To all the members who support our channel through our membership program, thank you. And if you would like to, there's the link in the description of this video. So PPI numbers came out and looks like, the button's not working. Okay. Wholesale prices rose 0.3% in November, which is hotter than they were expecting, the source from CNBC. Wholesale prices rose more than expected in November as food prices surged, dampening hope that inflation could be headed lower. The PPI, also known as a producer price index, which is a measure of what companies get for their products in the pipeline, increased 0.3% for the month and 7.4% from a year ago. Excluding food and energy, core PPI was up 0.4, also against a 0.2 estimate. What do you think? Do you think this is going to have a big impact on what the Fed decides to do on Wednesday with the federal rate hike? Robin?
Well, the wholesale PPI interest or inflation numbers and the CPI have generally moved together against the expectations of the markets.
Well, it makes sense, right? If producers are paying more, then the customer's going to pay more.
So, is it Tuesday? Tuesday next week, the CPI numbers come out?
That I'm not sure.
I think it's next week. When is our Fed meeting? Is it the Wednesday?
FOMC meeting is Tuesday, Wednesday. Wednesday is when they announce the rate hike.
Okay, so then it'll be Tuesday. It should be Tuesday then. This is the day before the meeting. So
next week's going to be pretty hectic, guys. Like Tuesday, Wednesday. By the way,
yeah, I think if this is the case, this is a foreshadowing that we are probably going to have a higher than expected CPI number, which is the doomsday scenario for the Fed's interest rate hike.
Now, we'll leave majority of the speculation to our Wednesday FOMC show, which, by the way, guys, mark this on your calendars. It's going to be phenomenal. A lot of time and effort has been put into our FOMC show. It's going to be completely different, like a whole separate live show. You do not want to miss. We're going to have Gareth Soloway, Magic Internet Money, join us. But if PPI numbers came in hot, right? If CPI numbers come in, even if it's, let's say 0.2, do you think 50 basis points is off the table? Because we can agree 50 basis points is what we're expecting.
I think they'll, even though the number will probably come in higher, I think that there was a possibility of maybe 0.25. I think that might have been something that was floated around during the meeting. Oh, no chance whatsoever, right? At this point, especially if CPI comes
25,
in over,
no, 25,
yeah,
no way.
I'm just saying that there was an inclination or a thought that hey, if CPI, because the whole reason that the Fed is raising interest rates is to lower inflation. And if inflation came in performing way better than expected, and then at that point, they could be like, hey, we're staying the course. Let's just do 0.25. It's realistic. But what's not realistic is if unfavorable CPI number, no chance whatsoever.
0. Okay, so this is in title of our thumbnail here, or our video. There's a new FTX revival plan that's been set forth by none other than crypto banter man, Ran Neuner. So here it is. Fire up the FTX exchange, issue a new FTT token, distribute the token to creditors and depositors, accrue 100% of profits to token holders. It will be the biggest exchange in the world and users will be made more than whole. To which Sam replied, I continue to think that this would be a productive path for parties to explore. I hope that the teams in place will do so.
Rand, stop it right now.
This is the dumbest.
Stop planting the seed, man. Stop it. Did Luna Classic fix anything? No, it did not. This is not going to fix anything.
This is such a bad take.
All it's going to do is call on these DGen FOMOs to come in here, pour money into a speculative token that's going to have crazy amount of volatility, and that's it, bro. And then at the end of the day, it's going to be a hope or a glimmer of getting some money back. You probably won't even have liquidity to sell it because as soon as they issue it out, everybody's going to try to exit it as soon as there's liquidity. And that's going to tank the price. And not to mention, they already have an FTT token. What are you going to make? FTT token V2?
FTTT. I think this is a pretty good response from Benjamin Cohen, which, by the way, he does a lot of in-depth analysis. Definitely recommend you go follow him into Cryptoverse. He said, LOL Classic, just another person thinking that issuing a new crap coin will make up for the collapse of their last crap coin.
You cannot, let's be clear here, okay? You cannot create real value from thin air. I mean, I know there's examples of it in the past. Done it. But you're taking money from somewhere and moving it somewhere else. That has always been the case. Money does not just poof into existence. You can look at the U.S. economy as a great example. Hey, we'll print some money. Sure. At face value, it looks like you just poofed some money into existence with no accountability. But what you did was you drained purchasing power from other areas. The same thing will happen if you created a crap token. Somebody's that money, when you go to sell, that comes from somebody's wallet. Now, whether it's from funds that are on the exchange that would be going to bankruptcy to get divvied out, and then it's going to get sold at pennies on the dollar and lose even more of its value. I don't know the intricacies of what it would look like, but I'm just saying that money and value is not created, it shifts.
Is there any way out for FTX? Is there a revival plan that you could think of? No, right?
Not at all.
All right. I want to see what our man Forrest thinks. So, Rocco, let's go ahead and bring Forrest in. Forrest!
What's up, guys?
What's up?
How you doing?
Going on, brother?
How's it going?
Can you hear us? Can you hear us?
Yep, I can hear you. Can you hear me?
Yeah, we're good. How you doing, bro? Miss you, man.
Doing well. How about you guys?
Good. Just been hanging out with Robin all week. Did you catch the guys? If you're not familiar who this man is, this is Forrest. He's a part of our channel. He comes on every single Friday. Gives us Forrest Fast 5 on Mondays. So Forrest, thank you so much again. What are your thoughts on the new FTX revival plan? Are you saying there's a chance?
Did you see the plan?
Yeah, I say no way. I would not feel comfortable with my money on that exchange, and I would not feel comfortable telling anyone else to put their money onto that exchange, even if it had completely new leadership and management and SBF was out of the picture. First of all, I think SBF would find a way to weasel his way back in, the way the media is treating him and the connections that he has. Second of all, like the core infrastructure, I think it's polluted. It's like there's a backdoor God mode. It got hacked it got hacked. Like it just, I say, hacked, but in quotes, but if they claim it got hacked, I mean, this is just no way I would put my money on that exchange if they fired it back up. And I think anybody who does put their money back on that exchange, if they do fire back up, I think honestly deserves to lose their money, because I think that would just be an absolutely idiotic move to make.
Amen. I don't think there's anything wrong with that statement. If you're dumb enough to do that, then I'm sorry, man. But what is it called? Natural selection.
Yeah,
you've been naturally selected to lose all your money.
Yeah, I mean, like you come to Vegas and you decide to dump $10,000 into a slot machine, and
you're gonna lose it.
You understand the risk, and so it's not the smartest idea. So there you go.
Forrest, what's your so PPI numbers came in today? The producer price index that came in hotter than expected. Core is up 0.4, and the standard or the nominal is up 0.3. We have the CPI numbers coming out on Tuesday, and then the very next day is the FOMC meeting where we're going to get the announcement of the interest rate hike. Do you think with the PPI number coming in hot, which probably means the CPI number might come in hot, do you think 75 is back on the table, or do you think it's still going to be 50?
I think it's still going to be 50. I do think it's still going to be 50. I think the Fed is acutely aware of the risks of over tightening. And they can always, and Jerome Powell has said this in his last, multiple times, but in his last speech, moving slower is potentially advantageous versus trying to move fast. They've already moved very expeditiously, very quickly. We've never seen rate hikes occur this quickly. Backing down to 50 doesn't necessarily mean that inflation is just going to run away and start moving back up again, versus going up to 75 again, I think would be really, really not good. The risks of going up to 75 versus going down to 50, and then they can do 50 50 50, they can do 50 50 25, they can do 50 25 25, but it gives them more flexibility at later stages. If they over tighten too fast, they're in a situation where they might actually have to cut rates sooner than they'd like to. I do think that they're going to end up cutting rates sooner than they anticipate, But if they overdo it and go to 75, then rate cuts become a potential topic of discussion sooner than they want, and that's a significant risk.
I want to ask both of you a question. I'm going to ask Robin
just to clarify, the CME has the 50 basis point at 77% and the 75 basis points at 23.
Has that gone up?
I'm not sure.
I'm not sure when the numbers were fetched, but I'm assuming that number probably will go up.
That's the same that's right where it was after Fed Chairman Powell's Jay Powell's last speech. Those are they haven't. Yeah.
I remember it was around 75
for some reason. Maybe. Okay.
It might have moved 1% or 2%, but it's pretty much in the general range.
I want to ask you both a question. Robin,
what's up?
Don't make this a really drawn out answer, okay? If you were to hold money in stablecoin, are you picking USDT or USDC? What are you more comfortable with?
I think USDC's probably, if there was a risk factor, I think the risk with both are very minute, if extremely minute at this moment. I think USDC seems to have more stability, or at least more transparency when it comes to what's backing it. Now, with that said, USDT does have a little bit more trading pairs, and so there's more liquidity. So if you were to if you were looking to trade and didn't want to minimize your fees, even though the fees on stablecoin swapping is pretty minimal, it is still something you should account for. So if you're doing massive amounts of trades and you want to get in and out of different stablecoins, it is definitely cheaper to go with Tether generally for the pairs. But me personally, I feel more secure with USDC. But there you go.
What about you, Forrest? Tether or Circle?
USDC for sure. A lot more transparency going on with USDC, and USDT has been guilty of some really shady business in the past. I do think that most of that is probably behind them. I think they're under a telescope right now, and they know they've been under a telescope all year long. I do think it is very likely that they are fully backed or close to fully backed, versus I think they had some exposure earlier on in the year, and that's all speculative. But I think it's completely possible that USDT did some shady stuff, but they've basically danced their way into solvency and made sure that they're okay. That being said, USDC right now is as far as centralized stablecoins go, the one I feel most comfortable with. BUSD, it's like you have that whole Binance exchange attached to it, and we just saw what happened with FTX. Yeah, it just would. I think USDC is the way to go right now. Otherwise, like DAI is a really good option as well, the decentralized stablecoin.
Yep. So I want to know what the chat thinks. Are you more comfortable leaving your money with USDC or USDT?
Let us know. You mentioned the BNB. And so BNB did flip Circle as far as market cap.
He's talking about BUSD.
Oh, yeah, never mind.
Binance stablecoin.
Yeah.
But I agree. I would be very weary.
Yeah, it did move up quite significantly in the rankings. Yeah, Binance is the BUSD is at $22 billion market cap. So
I think part of the reason I guess USDC people are more comfortable with is who's behind it. You got Coinbase, you got BlackRock, which is obviously the government's handy friend over there on the side, which helped bail everyone out in 2008. But I would tend to agree. You guys got to remember when FTX collapsed, we didn't really talk about this either because everything going on. But USDT got down to 93 cents. Now it's back, but hey. But the reason I ask you guys is because Coinbase has officially started Stablecoin Wars Part 2, as they are asking users to switch from USDT to USDC. Coinbase said starting today, it's waiving fees for global retail customers to convert their USDT into their own founded USDC. Now, remember, USDT is the third most widely traded digital asset on Coinbase. Not just stablecoin. So the third most traded asset. So behind, I'm assuming, Bitcoin, and Ethereum. Next is USDT, which represents 5% of the volume on their exchange. And again, like I mentioned, days after FTX, USDT was knocked off its peg and traded as low as 93 cents. Is this a smart move by Coinbase? Rob, I want to ask you first.
Well, they have investment and backing into USDC and with Circle. So it's advantageous for them to promote their own token, and waiving fees is essentially a promotion, right? And so you're marketing your own product, and your marketing strategy is to, hey, switch over. It won't cost you anything. And as I mentioned earlier, you do have to pay to switch generally. And even though it might be minute, that is something you need to account for. So here, that's scratched off the table. So, yeah.
What about you, Forrest? Do you think it's a smart move by Coinbase? Or do you think they're alienating too many people and people are just going to move money off their exchange?
No, I mean, I think USDT has always been like a kind of a systemic risk in the entire crypto market, and anything we can do to inch away from our reliance as an industry on our reliance on USDT as an industry, I think is a good move. I'd like to see the stablecoin market become more and more fractured. USDC taking up some market share. I think USDC is too big. I'd like to see DAI take up more market share. Aave is launching a new stablecoin. I'd like to see take up some market share. Cardano launching an algorithmic stablecoin. So I'd rather see a more Frax share has Frax USD. I'd like to see the stablecoin market just continue to grow, but it become more fractured so that there's no, linchpin that could destroy the entire crypto space. Not that it would destroy the entire crypto space, but if USDT depegged and became insolvent, and USDT wasn't backed, or there's a bank run and a lot of people lost money, that would be FTX times 20. It would be significantly worse. We're actually seeing a lot of USDT. I'll briefly share my screen because this is really interesting.
Yeah,
we're actually seeing the burn leaderboard, like gas fees on Ethereum spiked recently, and that's going to put deflationary pressure on Ethereum. But the burn leaderboard, Tether, up at number 1 over the last day, burning almost $1 million worth of Ethereum. So I don't know if this has been sparked by the Coinbase thing, but we're seeing a lot of USDT transfers going on right now, which is very interesting.
That is interesting. Before we get into the charts, I want to pivot to one more piece of news, and it's regarding Ethereum. So if you have Ethereum staked, there might be some good news for you. And Forrest, I want to get your thoughts on this, and then we'll jump into the ETH chart. So ETH developers target March 2023 for the Shanghai hard fork, which of course will bring the staked Ethereum. It will unlock those. Core programmers have set a tentative deadline of March 2023 for the Shanghai hard fork. Developers will aim for May or June 2023 to launch the EIP 4844 upgrade that will introduce proto-dank sharding to the network. After the Shanghai upgrade, staked ETH users can withdraw their funds along with any applicable staking rewards for validating network transactions. Before I give it to Forrest and we jump in charts, Rob, do you think this deadline is going to stick, knowing,
Nope.
No? Okay. That was fast. No
chance.
Apparently, the developers, there was a few other things that was supposed to come before the Shanghai hard fork, but they put this one ahead because they want to unlock user funds. Forrest, are we going to see ETH Armageddon when this thing unlocks, or is it going to be like the timing is going to be bad with macro to where people are just going to dump their ETH they had staked and locked up for, let's say, year and a half?
Well, first of all, I think it's a positive development. Obviously, like, we want people to be able to eventually withdraw their Ethereum. If it's just locked in there forever, that's not a good thing. So this is been planned, and I think this is a positive development for Ethereum as a cryptocurrency. But no, I don't necessarily expect Armageddon. Maybe we get a little bit of panic, a little bit of worry, a little bit of crash moving into this unlock. People speculating that a lot of people will sell. You also have to understand that people that stake their Ethereum, these are like the biggest believers in ETH in the entire space. They staked their Ethereum knowing that they were not going to be able to get it for a long period of time. There was essentially no hard timeline on the unlock date. So they've been comfortable having their Ethereum staked for a very long period of time. And in my opinion, the fundamentals of Ethereum in that period of time have only drastically improved. So Ethereum to me looks like even a more attractive investment now than when the beacon chain staking actually went live. So maybe you get some people that are just trying to realize profits, maybe people that have been hit hard in this bear market and they just need capital as soon as possible, and they sell off. If we do get a sell-off, I'll be waiting there to buy it up. I'll continue to stack Ethereum. But otherwise, I'm not particularly worried about a massive capitulation here.
Okay. You want to hop into the charts for us? Take a look at maybe, I don't know if you want to start maybe with ETH, or we also, of course,
yeah, sure.
Your coin highlight video was Avalanche as well. So maybe take a look at that also.
Yeah. I do have plenty of charts to go over. We can start with ETH.
Our thumbnail theme for today, or theme for the show, was price predictions on Bitcoin. So if you have, I don't know if you have anything like plotted out on where you think the movement of Bitcoin could go, or just crypto in general, as far as forecasting into the future.
Yeah, absolutely. All right, so using our margin pressure levels real quick on ETH, I'm just keeping a very patient mindset here for Ethereum. Going off of our last swing high up to around $2,000, we get our margin pressure levels, our short MPLs, which is just isolating for leverage traders and behavior in the market. We know where resistance is going to come in, and those shorters are going to want to pile back in on top of Ethereum. And we know where the shorters really kind of have to lay off a little bit and leave the market, and that allows buyers to come back in and push the price of ETH back up. And those two levels are 10-15 on the downside, so I think that's a really, really good place to start some even some short-term trades, but also longer-term accumulation plays. Anything below $1,000 or $1,020 for ETH, I think is going to be pretty solid. And then we've got tons and tons of resistance that we're starting to eke up towards at around 1353. I'll actually be shorting Ethereum there. As bullish as I am on it long-term, there's a lot of resistance, and I will happily get liquidated or stopped out on my short positions if we blast through 1340 to 1350, but there's a lot of resistance there. So that's ETH. Those are the levels that I'm paying attention to. I do want to briefly touch on the legacy market, because everything's just kind of hinging lately on the legacy market. We'll get rid of our short and long margin pressure levels here. And what we've actually seen in the S&P 500 is a retest of this downtrend line. I was very adamant about this being a good place to de-risk from positions. And all we've seen, people are kind of worried, and the bears are coming out of their, little 2 or 3 week hibernation here as S&P 500 was kind of moving upwards. All we've done is we've now seen a pullback and a retest, and now we're currently holding some support on our 21-week simple moving average. This is different from what we've previously seen, where we deviated above it, fell back below, and failed to reclaim and fell down from there. We said we've actually seen this pattern twice, right? Where we deviate above it, we pump above it, and we retest from below, and we get rejected, right? So what we want to pay attention to is, are we going to hold this level? And right now we're spending a lot more time above the 21-week simple moving average for the S&P 500, and I believe that this is a very pivotal moment and inflection point in the market right now. I think we can break upwards, and I think we can break downwards. I think a lot of it's going to depend on what kind of news, at least in the short term, what kind of news we get out of the CPI print now next week. Now, as far as what we're seeing here on a short-term basis, the last week has been relatively bearish. We've fallen back down. That's honestly quite expected. We ran into resistance at our 21-week simple moving average, and the market is a little bit on edge, right? We're seeing VIX, we're seeing the volatility index, fear in the market start to spike a little bit. And who's really buying into one of the biggest CPI prints of the year? Right? Who's really buying into this data release that's going to potentially dictate the direction of the market? So if we go over to VIX, we're actually we would have expected, right, a VIX bounce here, right? A VIX bounce here going into November CPI. This was October CPI over here, and what do we see? Right, a couple of days before, you get that uneasiness, that restlessness in the market where you start to bounce. We came down to support here on VIX, and we've since bounced, and we're leading up into this November CPI. There's nothing here yet to raise the alarm bells. I think this is just an inflection point that we need. Like I think in terms of the S&P 500 should have already de-risked some positions over here. But otherwise, I don't see any reason yet to just hit panic sell until we actually see what CPI comes, how CPI comes in. In the meantime, I think a further slow bleed off into CPI is probably most likely. I think you're not going to find a lot of buyers in the market until after CPI comes in. And a lot of times you'll see that bleed off into CPI prints. Even if it comes in hot, sometimes we've seen the market actually bounce on a hot CPI print just because it was so beaten down going into it, because of the fear. Now, the next two charts I'm going to show you are charts that people have probably never seen before. This is new highs and new lows in the New York Stock Exchange. So this is new highs minus new lows. So the number of stocks in the New York Stock Exchange making new highs minus the number of stocks making new lows. And we've got this overlaid with the S&P 500. And what we see historically is these bottoms occur, right? These bottoms occur right at the point where your downtrend in new highs minus new lows recovers the zero level. So now you've got more stocks making new highs than stocks making new lows, right? And you've also broken the overall downtrend, right? And this is actually, the last couple of big crashes that we've had, this has actually been pretty in line with the bottom. When you can get through that downtrend and individual stocks start making new highs than stocks making new lows. And the reason that this kind of normalizes the data a little bit, reframes the data a little bit for us, is that you could have individual stocks within the S&P 500 skewing the data, in terms of, overreacting to downside, especially when you get these extraneous extreme market circumstances. Certain stocks could be, dragging the S&P 500 down or artificially pumping it up, when in reality, we do want to take a look at, the number of stock. What are most of the stocks doing? Are they making new highs or new lows? When you recover that level here, that zero level, and you start seeing more stocks making new highs than new lows, and this starts to get positive again above zero, that's usually meaning that usually historically at least has meant that the bottom is in. And obviously the COVID crash wasn't necessarily an exception, but that crash came very, very fast, and we didn't have that nice trend really. But again, once we actually started getting back up above zero and putting time in above this zero level, which is this horizontal line, things got bullish again. Now, recently, we've actually seen that exact same thing happen, where we've actually broken through the downtrend on this, and we're starting to put some time in above the zero level. Now, as of right now, we're at -8. So we've popped back down below, trying to make some support on the back of this trend line here. So again, we're at a very pivotal inflection point in the market. If we get a good CPI print next week and stocks start making new highs, more making highs than making lows, and we start spending time up in this zone above the zero level, that actually would indicate that maybe the bottom was back in October, or at least a local bottom. Whereas if we go back down into the negative range, which we're currently sitting in right now, but again, understandably so, because we've got the CPI print next week, market's a little bit spooked. If we start going back underneath this trend and that ends up just being a little deviation, and we start, falling down again, then at new lows in the S&P 500 as an index are definitely on the table. This is the exact same chart, just for the just for the Nasdaq instead of the New York Stock Exchange. The data is very, very similar. Just the difference is we haven't quite gotten through our downtrend when it comes to Nasdaq new highs and new lows, but we are at this critical inflection point where we started to drift back upwards, which is very interesting. We wanted to take a look at AVAX, right?
Yeah, please. We did do the
Okay.
we did have your weekly coin video on AVAX, and there were some partnerships with Alibaba. You talked about some bullish divergence on price. Has anything changed on the charts, or are you feeling any different than what kind of we talked about on Monday?
Yeah, so I mean, look, AVAX is super. I'm not gonna say oversold. I mean, it is oversold, but it's down significantly, and we are getting bullish divergence on the weekly. That's usually a sign of some sort of a bounce back upwards, a local bottom. It doesn't necessarily mean that it's going to be the bottom, but the buying point that I'm really potentially excited for would be around $10, and that's off of our last local highs, margin pressure level. It matches up with our prior demand level at around $10.32. Right. And what this would more than likely, this would more than likely manifest in is another print of bullish divergence. So if we come down to 1032 or so, that's going to be very strong support. And chances are we're still going to put in a higher RSI at some point at 1032 if we find a bottom there on than what we saw back in June. So that would still print bullish divergence, and we'd be getting in at a really nice entry point. So 1032 is a level that I'm watching very closely for AVAX as a potential bottom level. Otherwise, I'm very confident in AVAX's technology moving into the next bull market. I do think it's a chain that's gonna and a coin that's gonna perform fairly well once demand returns to the space.
Awesome, man. What other? I know you've taken a look at the oil chart, pretty often, and with the FOMC coming out and CPI coming out, what's crude oil looking like? Are you still using it as a hedge against negative market conditions, just in general?
Yeah, exactly. So this has not been a play necessarily based on me being bullish on oil, but it has been a hedge against really nasty market conditions or potential for really nasty market conditions in 2023. And actually, we had a really interesting chart here. This is this is called Livermore speculative chart. Livermore, just an old trader, I suppose. I haven't done a ton of research, but this is always really interesting. I'm sorry?
What was that, from the 1920s?
Yeah, early on. I don't know exactly what the time frame is. I need to research him a little bit more, but it's always interesting when you find these old traders' chart patterns, and they're still holding up today. So this is known as Livermore speculative chart. You get this accumulation cylinder with a widening mouth, and it pops up and goes parabolic or really runs up. And we saw that play out this over the last year or two with crude oil, which is really interesting. And now we're coming back down into this demand zone, this accumulation zone. Now, for me, crude oil is simply a hedge against, all right, what is the worst case scenario that we could see in 2023? We're already expecting a recession. We're already expecting some pretty bad economic circumstances. But the U.S. has put themselves in a position where they have depleted the strategic petroleum reserve, and that strategic petroleum reserve needs to be refilled. And I believe we've just finished our drawdown of it here in December. So that makes sense that we've moved in a downtrend all the way through December. But now we're going to start to see the United States buy back that oil. They've already come out and said that they're going to be they have plans to refill the strategic petroleum reserve, and I think their buy point is around $70 that they plan to do that in. So again, does that put a floor in at $70 for oil? No, I think we could certainly see it come in lower, but we have demand underneath here in the form of the U.S. needing to push up their strategic petroleum reserve and refill those levels. And not only that, we're no longer artificially depressing the price from these higher levels. So will be really, really interesting to see. I think high energy prices would exacerbate inflation, which is the number one fear that we have in the markets right now. So if we got into a situation where oil was spiking again in 2023, right, I would want exposure to oil because that's probably going to be really, really, really bad for all other markets because that's going to increase the prices of everything and it's going to cut into the margins on just basically every single business out there. Now, interestingly, getting a little bit speculative here, we're looking at QNT, and I do think that there is a chance that we're seeing a very similar pattern to this, what we saw in oil. We're seeing this expanding accumulation cylinder, or what could be an expanding accumulation cylinder, if QNT in the very near future can start to get a bid and start running vertically. I don't know if market circumstances are going to allow for that. I've seen, I think very highly of QNT. Started to see the market react pretty well and favorably from a sentiment perspective to QNT. We've recently seen it run in this bear market, outperformed just about everything else that we've seen in this bear market. The question is, are we going to catch resistance here and put in a little bit of a head and shoulders pattern? All right, which could push us down to our target accumulation levels between $60 and $80. And that's where I'll be looking for a longer term accumulation. Or if we start breaking out here very aggressively, I'll look for a short term trade to push up to potentially new all-time highs. And I know we're in a bear market here, but again, we've seen QNT perform extraordinarily well in this bear market. And it's very reminiscent of Chainlink last bear market cycle, where Chainlink just ran away from everything. And we saw Chainlink dominance completely. This is Chainlink dominance, Chainlink market share. In the midst of the bear market, again, this was 2018 all the way through. This is the beginning of the bull market. Chainlink just outpaced everything. And right now we're in a bear market, and QNT is just really, really running and taking a lot of market share. Again, am I saying that it's going to continue to run? Maybe, maybe not. We can't be certain, but it actually QNT put in an all-time high in terms of market share back in when it peaked above $200 recently. So QNT in relation to the rest of the crypto market is just now coming off of all-time highs in price exploration and coming back down for support. So if it catches another bid, I do think that QNT could be a runner. Not saying to ape in. I'm looking to get in at much lower prices if we get the opportunity.
Cool, man. And I know you've talked about QNT having great tokenomics, only 14 million tokens in circulation, which I believe the majority of them are already in, and they're ISO 222 or however you say it. Is it 200022 or 222? What do you say, Forrest?
Wait, the ISO 222 compliance thing?
Is it 222? Okay. I've heard different variations.
It's 222, but it's 20022. Yeah. It's kind of dumb. They need a catchier name than some random code.
Way too many numbers, my friend. All right. Do you have any other charts you want to show for us?
I can run through the Bitcoin ranges that I'm looking at really quickly.
Yeah, if you can, please. Yeah.
I know otherwise, I can take charts on requests depending on what your guys' time frame is. Okay, Bitcoin margin pressure level off of our last local high. This capitulation, we have yet to see a bounce back in Bitcoin to any large degree. Right now, we are ranging until proven otherwise, and we are still technically holding this the top of our range here, 17,178. Struggling to break through it. It's trying to break through, but we are holding this resistance. And the more they'll hold it, and the more frequently we get rejected, I think it's completely possible that we come right back down to 16.1K. Now, if we go back down to 16.1K, what you're going to hear is, a bunch of doomsdayers and bears saying, all right, 12K is inevitable. We're heading down to 12K. We're heading down to 6K. We're heading down to 8K. I think it's completely possible that we just head back down to the bottom of the range. And actually, I would say that's probably the most likely scenario is that we just continue to consolidate within this range, or, slightly above or slightly below. Remember, the biggest exchange collapse we've ever seen, probably the worst black swan event that we've ever seen, just occurred, and we're still seeing Bitcoin above 17K right now, and we're actually seeing slower drawdowns than what we've seen historically. Now, I do think that 12K is on the table. If we take a look at our easy bands here, it is on the table, but it really needs a catalyst opinion to push us down there, right? And if FTX collapsing could only push us down this far, and we've started to drift back up again, what is going to be the catalyst that's going to push us down to 12K? Maybe it's Binance, maybe it's USDT, maybe it's Bitcoin miner capitulation. I don't know. I think those catalysts are looming out there. They're threats. But in my opinion, I think the most likely scenario here is that we get further consolidation, further sideways price action, and until it becomes more apparent that we're getting another downside catalyst or another big scare, I'm not necessarily worried about 12K yet. Again, it's on the table, whereas before it wasn't on the table in our previous capitulation. It is on the table, but I do think it's going to take something to actually push us down there for us to go hit those levels.
You did mention minor capitulation, and I'm going to swap over to my laptop here in a second because I want to show the Bitcoin holding came out for the top public miners, and this is what it looks like. So you have obviously from January to current, every single mining company except for Hut 8, Marathon, and Riot have decreased their Bitcoin holdings from October to November. With the biggest outlier to me here is the speed of the speed at which the rate Core Scientific has dumped their Bitcoin, going from over 9,600 Bitcoin on their balance sheet in April of this year down to 62 Bitcoin. That's 62, not 6,200, 62 in October. November numbers haven't come out yet, but obviously the trend is there. People are having to sell their Bitcoin with obviously with the exception of maybe 3 of them. Are you seeing, you mentioned capitulation risk might be what pushes down to 12K. How do you interpret this chart? Do you think more pain is to come? Do you think that if these companies that show here, Hut 8, Marathon, Riot, Bitfarms, some of these, Bit Digital only sold 30 Bitcoin, you think this is a positive or a negative?
I think this is a negative. It just becomes like this self-fulfilling prophecy where as far as like price action goes, in order for price to move up, there has to be a reason for the market to buy. And for price action to go down, there has to be a reason for the market to sell. Right now, there's reasons for the market to sell, one of them being this Bitcoin miner capitulation potential, but there's really no reasons for the market to buy other than Bitcoin is cheap in relation to where it's recently been valued in the last year or two. Now, once the halving comes back around, there will be a reason for people to buy. Oh, Bitcoin halving, supply crunch, net issuance reduction. Everybody's going to be on the same page. Everyone's going to be buying into this halving because we've seen the way it's worked out the last 3 market cycles. And then Bitcoin can probably go back up in price. But until March of 2024, right? March of 2024, which is still like a year and a half. I think it's 15 months away, if I'm not mistaken. We still have 15 months until the next Bitcoin halving. Really, until people start getting excited about it, we probably have a year, right? 3 months before the Bitcoin halving, we'll probably get some excitement about it, some people bidding the price up. But we still really have a year until that buy pressure probably starts coming in again. And the longer that Bitcoin's price stays depressed and it remains, the margins remain either negative or razor thin for these Bitcoin mining companies, it just becomes really a self-fulfilling prophecy where, they sell off some Bitcoin to cover some expenses, and that pushes Bitcoin price further down and actually makes their business less profitable, right? They're in the business of mining Bitcoin. If they sell off Bitcoin, it pushes the price down. It makes it less profitable for them to mine Bitcoin, right? And then it's not profitable, so they have to sell more off and sell more off and sell more off. I personally actually think Bitcoin mining is a really, really bad business model. I scratch my head every day wondering why people went into this business, because it's you have these minor capitulation issues that can occur if Bitcoin's price stays very low for a long period of time, essentially wiping out a lot of miners. But it's dependent. The whole business model is dependent upon two variables that you can't control. One, Bitcoin's price, and two, energy prices. Energy prices dependent. You can always move geographical regions and whatnot. You can, but overall, it's going to be really, really difficult to control energy prices, and even more difficult to control Bitcoin prices. So I don't know why anybody went into this business in the first place.
What are your thoughts on that, Robin? You agree with Forrest?
Why anybody went into the Bitcoin business?
No, that mining is a bad business.
No, I know.
I mean, was anyone saying this though when Bitcoin was at 50K?
I mean, I don't think that proof of work mining, it's obviously not efficient as far as compared to proof of stake. I mean, the overhead alone is not as efficient as financially. And so, if it can be done without expensive hardware, without the use of energy, and there's no compromise to the network itself, and there's no compromise to the security or decentralization, if you can find a remedy that doesn't incur so much overhead, then it's a no-brainer to me. And I mean, that's what we're seeing right now when it comes to Ethereum, and we're testing out the ecosystem of a proof of stake blockchain that has millions of users, that has millions of transactions. And as of right now, check mark, it's been working. And if 5 years from now, the Ethereum network is still secure with no attacks, no vulnerabilities, no takeovers, no proposals that got pushed through because too many people, because someone had too much Ethereum for voting power. If we don't see those compromises, I don't understand what argument you can make that makes Bitcoin that much better. Because what I'm seeing is a centralization of Bitcoin miners, the centralization of less and less mining rewards going out to fewer and fewer people, and there being more control. So this whole thing about decentralization, they always hang their hat on the hash power. But I cannot go plug my computer in and mine a Bitcoin.
So then if it's so centralized, then why haven't they tried to take the network over?
Because it goes against their business model. You break if you take over the network, or you try to change the network in any way, shape, or form. If you do have, and not to mention you also have nodes as well. So it's not all dependent on the miners themselves. And so it's easier said than done in principle, but you're still, why would you invest billions of dollars into a business and then watch it burn down because of your own nefarious actions? And that's what the Bitcoin maxis always hang their hat on, but
it's a valid point. It's a valid point. You spend all this money to set up mining, and even if you get all the hash power, if you do anything that's going to disrupt or hurt Bitcoin and the network, then it's going to stop being used, and all the millions and billions of dollars you spend on the mining equipment is going to be gone.
But it's the same for staking. If you put in billions of dollars or millions of dollars into a stake pool and you're staking, you're de-incentivized to do anything malicious to the network. And so for whatever argument someone can make for Bitcoin, you can make the same for proof of stake at this current moment, because the system hasn't been compromised. And so I think we're seeing the world's largest experiment when it comes to the proof of consensus mechanism between Ethereum and Bitcoin. And I'm telling you, as of right now, I just don't see the need for proof of work if proof of stake stays the course and has no compromises.
No, you got anything to add to that for us?
Yeah, I mean, my opinion, like I'm not horribly worried about like Bitcoin centralization or nefarious actors. I do think that it does over time because of economies of scale, right? The most wealthy people can afford the bulk deals on mining equipment, cheaper deals on mining. I do think that it centralizes a little bit over time because of it, but that's not from like an investment standpoint. That's not the issue I have with Bitcoin. The reason I don't invest in Bitcoin is because I believe that, or I know that it just objectively requires more demand. Bitcoin requires more demand entering the market, more buyers, more demand entering the market to push its price up than proof of stake Ethereum does, right? Because there's more overhead. Then you also have this self-fulfilling cycle of in these scenarios where you can get into where we're at right now, where minor capitulation becomes an issue on the table, which leads to larger drawdowns, right? If it again, I throw out the term death spiral. I'm not saying Bitcoin's going to death spiral, but it could capitulate, right? It could get into a capitulation spiral where these miners capitulate and have to sell more and more Bitcoin, which pushes the price further down, which makes them have to sell more and more Bitcoin. That creates a really large drawdown in the price of Bitcoin, which is not an attribute of a store of value. A store of value should not have a bug in it that can, that creates these scenarios where it could potentially capitulate and have super, super large drawdowns. On top of that, reiterating my prior point, it's just a situation where there's so much energy demand or energy cost to securing the network that it just requires more demand to push the token price up. And I would rather be in something that doesn't require as much demand to push the token price up because the structural flows are less leaky.
Okay. All right, Forrest, we are going to let you go. Thank you, as always, for an amazing segment, for joining us and in empowering us with your knowledge. Guys, if you're not following Forrest, go follow him on Twitter at 0xstacker. Rocco, will you throw the handle up there? Also, go subscribe to his YouTube channel, Crypto Stackers Pro. He does a live stream every single day. Is it Monday through Sunday or Monday through Friday?
7 days a week, 10 p.m. Eastern time, unless I'm traveling.
7 days a week, 10 p.m. Eastern, 7 p.m. Pacific Standard Time. Make sure to go check it out. Forrest, we appreciate you as always, my friend. Thank you so much. And we will see you virtually on Monday.
Have a good one.
See you guys. Thanks for having me on. It's always a pleasure.
Take care. All right. Guys, go follow us on social media. Go follow us on Twitter at SinCityCrypto1.
And I'll be on Around the Blockchain today.
Yes, Robin will be on Around the Blockchain today. Will Larry be joining him? Who knows? Maybe, maybe not. Also, if you're not a member of the channel, you want to support the channel, please feel free. Click the member button in the video here. That's in the description. All right, I don't know what the fuck I'm trying to say. Friends, family, friends, and family, and family, and friends. We'd like to thank you so much for joining us and finishing your week off with us here at Sin City Crypto. Make sure to come back Monday, 10:30 a.m. Pacific Standard Time. And we will see you then on behalf of myself, Robin, the Don, and Kyler Murray. Have a good weekend, guys. See you later.